following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Asim in Dallas.
Hi, Tom. I love your show.
Thank you so much.
I've been listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah. I love all the hosts. I love your show. I'm addicted to it.
It's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Accept others the way they are. You cannot change other people. So trying to change them is to fit what you want them to be is like trying to change a dog into a cat or a cat into a horse. They are what they are, and you are what you are. Market-wise, let's take a look at it out here. We have the Dow Industrials up 265 points. NASDAQ is down 20. S&Ps are up 9. Gold contract down $15.80, trading at $1,257 an ounce. Silver up 20 cents at $18.58 an ounce. Copper up 8 pennies at $2.54 a pound. Light sweet crude down 74 cents, trading at $44.53 a barrel. Notes down 17 ticks, 127.16. Bonds down 1 full point, 156.02. Both follow through with volume to the downside. 10-year rate right now is running 2.11, folks. King dollar up 276 ticks, traded at 98.80. The euro is at $1.08, and the yen is trading at 106.89. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So your SPY is up $1. We're trading at $217.39. We've gone to 218.31. You get volume out here of 142 million. The benchmark you want to keep your eye on out here today as we come into the close, folks, is $217.03. What 217.03 is that is the downdraft of September 9th, which the market has not been able to hold. We got up there. Well, that's where we came down hard on September 9th. We tested that on the September 22nd as well as the 10th of October, and both cases couldn't hold it. Dow Industrials, they're up over the highs, all of the above. Bottom line, Dow Industrials can get to higher price. We're at 18,850. The Dow would have to get back inside 18,668 to get a failure. But bottom line, it doesn't look like that's going to happen. The composite, NASDAQ composite, what you have with the composite, composite right now is down $22. The composite ran right into the resistance from the October 11th time frame. October 11th, we go from 53.21 down to 52.27. Composite can't hold higher price also. Gold contract, what do we have with gold? Gold contract out here today, folks. Gold contract is traded from a price point of $12.92 to $12.57. You've done 380,000 contracts, which is big contract volume. This is going to, well, you get the swing point. Your swing points, first swing point's 12.46. Right now you're at 12.58. So intraday here, as this has been banging down to the bottom, it doesn't look like it has enough juice to get into lower price today. Bottom line, though, we are coming into Friday tomorrow, and that Friday in a market this volatile, that could come down to 12.4660. Bonds, we're going to take a look at the 10-year note first. 10-year note right now has done 2.7 million contracts, so this baby's big volume. Yesterday we did monster volume. Yesterday we did 4.2 million shares. Bottom line, rates are going up. If you take a look at this 10-year right now, the 10-year is at 2.12. We take a look at the 30-year. What we have with the 30-year is this. 30-year right now is down 616,000 contracts, which is also a big contract volume. We're at 155.31. Now, if we take a look at this 30-year and put this on a continuous contract, what we have is this. The next swing point, this thing broke hard. So your next swing point is 151.12. And right now, we are at 155.31. So rates, bottom line, rates are going up. That being said, check this out. So good old King Dollar, folks, okay? Excuse me, folks. So King Dollar got to a price point today of 99.080. The last high that was generated out here was 99.090. So this is going to be intriguing if, in fact, King Dollar can't handle that high. We come up. You just about tested it today. Right now, 99, 695, 98. It would have to. Hey, we'll see whether it makes another run for it tomorrow. It's surprising it couldn't hit it. That's the real bottom line. If King Dollar gets under 98, 695, that's going to say it's a failure. That's going to say that's the end of the move with King Dollar going up into higher price. Silver, we go take a look at the silver market. What we have with silver is this. Now, this is some divergence inside the gold versus the silver. Gold is getting whacked. Silver, bottom line, isn't. Silver's up 20 cents. Silver's trading at $18.59. Bottom line is that you had volume at $19 yesterday. Today you get volume at $18.99, and that's saying that, guess what? Silver wants to challenge that $19 mark, and that was the downdraft of October 4th. So it's going to be wild watching that silver market versus the gold market straighten out. The big move in the commodity market, once again, is copper. Copper, you talk about taking off. Copper is up 8 pennies today. Copper was trading at $2.08 2 weeks ago. You're at $2.54 today. That is one monster move. That is a big move out there. No two ways about it. 877-927-6648. Let's go to Rick in Denver, Colorado. Hey, Rick, what's going on?
Hey, Tom, how are you?
I'm doing great, man. Yourself?
No complaints here.
Cool, man.
Hey, I wanted to ask you if this is a good time to get back into LABD.
Let's take a look at it. So you got LABD. LABD, folks, is the direction S&P Biotech Bear, 3 times the inverse correlation of the S&P Biotech Select Index. So if we go over and we just take a look at the IBB, we are at, okay, so you get a counter-trend bounce that starts off, first off we go to 246. Here, just hang with us a second, we'll be right back, all right?
Okay.
This is Tom O'Brien, this is TFNN, you stay right there, folks, we'll be coming right back. Dow Industrials right now up 256. NASDAQ is up, NASDAQ's down 23, S&Ps are up 9, we're gonna be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're talking with Rick from Denver, Colorado. We're talking about LABD. LABD, folks, is the Direction 300 times inverse correlation of the S&P Biotech Select Index. So if we go over there and we take a look at it, you get a nice counter trend bounce up here. You're at ICE. Let me just see what Regeneron's doing. That's a nice setup. Okay. So what's nice about trading this index is that, you know, you can go through a bunch of these folks, these biotechs, and take a look at them and mark off, like, because of the weighting structures inside them, is like, okay, you know, do they look good or not look good? I wouldn't go for this right now, Rick. One of the main reasons is that Regeneron, right? It's trading 427, okay? You have a high volume swing point at 443 that wants to get tested. And this had some real strength this week, man. So I'd let this get tested because it could blow this away, and Regeneron could go up to 484, and that still would just be a counter trend bounce. You know, but that's Regeneron's strong, man.
Okay, got it.
You know, so that's how I'd play that baby.
Okay, based on that, with Regeneron possibly taking off, do you have an idea where is the? You see the IBB breaking 300 on account of this?
Now this is what happens. This is pretty cool. So the IBB doesn't look great, okay? But you know, I trade the LABD myself a lot, okay? And so when I go through all of these, I pay more attention to these equities when that happens, okay? So it's like, the IBB doesn't have a high volume swing at that level, you know, but it's over. It had a big day yesterday. You know, it's over the high, so it's like, okay, that's the top of the consolidation, so it can at least test it. You know what I'm saying?
Yeah, I understand.
Now, actually, hold it. You stay right there. Yeah, but see, you put this on a weekly. Yeah, this can get up there, man. This can definitely get up there. Because you put this on a weekly, it's like it wants to go to 304.
Okay. Appreciate it, Tom. Thank you.
Okay, man. Have a great one. Have a safe one. Let's go to Carlos in California. Hey, Carlos, what's going on, brother?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
Very well, thank you.
Cool, man.
Tom, I have a question for you, and I'm going to hang up so you can answer and I can listen on the radio because I know you have the interview with Andy Heck.
Oh, yeah,
It's
okay.
related
That's
to-
all right. Yeah, Andy, I'm going to have him on all hour anyway. That's all right. Yeah.
Okay. It's related to the IWM.
Okay.
And I remember it was before the move that we had lately.
Yeah.
It was one of the weakest index.
Right.
Now, as a second part of my question, I remember that they were buying protection for this election, and the move was after hours, and it was biggest spike not only on the IWM but in all the indices. Can you explain me what happened to all that protection? Because see, when the market opened, it almost opened flat, and an option usually is traded during regular hours. Is that correct?
That they got toasted, right? All that
Okay.
protection, they didn't make money on that protection, right?
That's something I want to hear. Yeah,
Right.
it was worth it. Now, as far as the IWM, can you make the analysis for me, please?
Yeah, I wouldn't short the IWM right now. You know, you had 77 million yesterday. You have 65 today. This thing wants to hit the high, man. Let it hit the high first. If you're going to go short, I'd go short the S&Ps or the NDX 100. I think right now the S&Ps look more vulnerable than anything to me right now. You know, the Qs are the weakest. Okay, that showed us pretty quick, but the S&Ps are pretty weak too.
Beautiful. Thank you so much, Tom.
Okay,
And,
Carlos, have a great one, man. Have a
happy
safe one.
birthday.
Thank you.
Bye.
Thank you, man. Appreciate it.
Bye.
Now, folks, let's go over to our man, Mr. Andy Hecht, as we do each and every Tuesday and Thursday. And don't forget, folks, Andy's got a great show right here at TFNN every Tuesday and Thursday, 5 to 6 Eastern Standard Time. Now, if you happen to be driving down the West Coast, East Coast, in the Colorado, and you're listening to us in the radio, remember that you can get us 24 hours a day right on your cell phone. You go to TFNN.com, you hit Tiger TV, you're going to get some great HD audio as well as video. Andy also got a great newsletter. It's the Technomento Commodity Report. And these commodities are moving, folks, big time. You can come over to our website, go to newsletters, go to trading newsletters. You can test drive the Technomento Commodity Report 1 full month absolutely free. Andy Eck, what's going on?
Oh, Tom, how are you?
I'm doing great, man. Yourself?
I'm doing great. What a shocker, huh?
It's
President Donald J. Trump.
That's it.
That's it.
That's what
That's
she
the
wrote.
leader of our country now. We got to get behind him.
That's right.
So the bottom line here is that this shocker turns everything on its head, in my opinion, for the markets. I'm looking at the 30-year bond here, which began to tell us that something was up in July. And as you could see, I mean, you know, on the weekly basis, we got a bearish key reversal there. And it looks like this thing is going to keep falling. And it seems like interest rates are going to go up. I mean, the most significant thing about the election, Tom, to me, is that Trump won and they retained the House and the Senate. And it's going to be easy for him to get things through. There's going to be a lot of infrastructure building, according to, you know, what he said going in. And this means that, you know, and less regulations. I think that right now, I wouldn't be surprised to see the dollar make a new high above 100. Interest rates go higher. And I think that it changes a lot of things about a lot of markets. I personally, you know, I'm very concerned about gold here. I think that gold looks very weak, and I think that gold could head a lot lower.
I'm not in that camp, by the way.
Okay.
The camp that I'm looking at here, and this is where there's divergence in a huge way. These interest rates, if they continue higher, fundamentally, these companies are going to lose money hand over fist. So it's like, okay, the market's not paying attention to this right now. There's no doubt about it. In fact, it's going to, you know, anyone that's listening right now, everything's going to cost more money. You know, so that's kind of where I'm looking at it. You know, it's like
Right, I hear you. But the Fed is far behind the curve now. And, you know, with the stock market strong and the dollar not running away yet, they will hike rates in December, in my opinion. So The bottom line for me is,
listen.
and there's a lot of divergence. Look, what we're seeing here, we're seeing a big rally in industrials. So iron ore is up at $71 a ton.
Right.
The Baltic Dry Index has just made a new high in 2016. Copper is just roofing, baby.
No doubt, yes.
I mean, that thing's roofing. Silver, an industrial metal, is looking industrial, but gold is not.
Right.
Palladium is rallying. Platinum is not. There's a lot of divergence out there. Oil is weak. But oil is not going to get too weak before this OPEC, before the, as Dave White likes to call them, Schmopec gets together at the end of the month. So I personally, I liquidated all my gold positions on election night and the following day. I actually set up a little bit on the short side in gold here. And I think we're going to test this 1243, and I think we're going to go through it.
Okay, you stay right there, man. Andy Heck, Tom O'Brien, we're going to be coming right back, folks. Our phone number is 877-927-6648. Dow Industrials are up 244. Nasdaq's down 30. S&Ps are up 7. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials up 250. NASDAQ is down 31. S&Ps are up 7. We're talking about our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, right here at TFNN, great show, 5 to 6 Eastern Standard Time. The Technometal Commodity Hour. Andy also got a great newsletter. You can come test drive it right now. The way you do it, go to TFNN, go to newsletters, go to trading newsletters. You'll see the Technometal Commodity Report. You can test drive it 30 days absolutely free. And there's no doubt these commodities are moving, and they're moving big.
They're moving, no question. You know, there's two things that I want to run by you that I think here. And you might tell me I'm crazy, but this is the way my mind's going. First of all, I think that this election will mark the end of the era of accommodation, monetary policy accommodation in the United States. That's number one.
Okay.
And I think rates will go higher.
Well, yeah.
I also can draw some parallels, loose parallels. And I'm not saying that Trump is Reagan at all, but I can draw some loose parallels between the 1980 election and the 2016 election. We had problems with Iran going into the 1980 election, big problem.
Yes.
We had an economic problem, different kind. We had inflation going into the 1980 election. We have a different kind. We have 8 years of slow economic growth around the world and in the U.S., which is supposed to be the leader of the world. I mean, we're growing moderately now, but we're certainly not knocking the ball off the cover. We're switching from the Democrats to the Republicans, and unlike 1980, the President Trump will have the House and the Senate behind him, and both candidates in this election talked a lot about building infrastructure, which is fiscal stimulus, which the central bankers have told us for a long time is what's really needed to get the economy going.
Yeah, there's no doubt about that. Right.
So that is, I think that, on that path, that's very bullish for the dollar.
I
really
don't see that. Because what I don't see, what happens, the bond market is saying, this administration coming in is going to spend a lot of money. Well, where are they going to get it? Because they're going to cut taxes too. So that is saying that, guess what? You're going to pay up for it. So if we pay up for it, that means that, you can have the infrastructure, but guess what? People are going to have less money in their pocket. So we'll find out. I mean,
we'll find out. It's going to take a while, but if he is successful in renegotiating some of these trade deals, and gets a better deal for the United States, it could certainly help. So look, he's the president. We got to stand behind him like we always do, no matter who's elected. But I see a very big, the market action was very surprising. I mean, look, gold exploded to almost 1340, silver to almost $19. Now, silver is still hanging around there, but gold has come off dramatically since then. The bonds have continued lower, but stocks have gone ballistic, and I think stocks are going ballistic because of lower regulation. I mean, regulations will be cut.
Andy, but you're talking about the Dow. Stocks, I can show you plenty of stocks that have got killed.
Yes, but industrials are doing well.
Right.
Industrials. Yes, I'm just talking about the Dow, and certainly the NASDAQ has gotten killed.
Oh, no doubt,
The tech sector's getting killed. So there's a lot of bifurcation in markets. You got a lot of things going on here. It's very interesting. You got to pick and choose in markets. One market that's interesting to me today, Tom, that I want to point out for the listeners here is the natural gas market. Natural gas was going lower because the market was getting ready for a new record in inventories.
Okay.
New store. We got that today. All right. We're up to, I think it was up, 50 or so BCF. We're up above last year's highs, which is an all-time record. We're well above 4 trillion. But the interesting thing is, it didn't make a new low today. So maybe we found the bottom in natural gas.
Look at that. Interesting. I see it.
Yeah. And I think that it's been coming down because although the inventory injections have been much lower on a percentage basis than last year, and that's what fueled the rally initially, probably too soon. The anticipation of new record highs in inventories brought it down. But now that we finally got it, the market's saying, hey, okay, there's only 2 or 3 weeks left, probably 2 weeks left of injections. And now we got to focus on the weather. We've taken this thing down. I like that it didn't make a new low today. Now, It's bottom fishing, man, because it's still early days. And this thing is still a knife that fell from, the top of the highest building. But it's a little safer to put your toe in the water today on the long side than it has been in the last 3 weeks.
Yeah, no, I can see that. I mean, okay. That seems to be set up pretty nice there.
Right. Now, the other markets that are interesting, crude oil. I think crude oil's in a holding pattern until the end of the month. Bearish. Listen, I think Trump also is bearish for crude. He wants to.
Yeah, it's going to be drill, baby, drill. So I can see why crude wants to go down. Right.
Yes, but that also puts OPEC's backs behind the wall now. And for them to not do something, we'll put a 30 handle on this thing in a heartbeat. And they know that. And the Russians and the Saudis are going to have to shoulder some of these cuts if they want to stabilize the price of crude oil. And I think Trump's election made it a lot more possible that the Algerian Accord will not fall apart. We'll see.
That would make sense. No, I could see that. I could definitely see that.
I wouldn't go short crude oil here. I mean, what we're seeing is we have to really step back from the markets now. When we get a big political change like this, politics and economics, they go hand in hand. We have to really kind of take a deep breath and look at all these markets again in terms of what's going to change. The change, turning the economy, turning the political system. It's like a giant ocean line. It's going to take a long time. But the markets are going to reflect what happens.
Oh, I agree. Listen, I think he was pretty clear about what he said he's going to do, man. I mean, the bottom line is he wants to build the infrastructure. He's going to bring taxes down. And, that's why those bonds are going south, man. I mean,
by the way, he's going to build a wall. There's a lot of rebar in that wall. And by the way, steel, iron ore, up it's $71 a ton. That's huge.
Yeah, well, that had already happened. I mean, that's
right.
It
has gone up. It has gone up another $8.
Yeah.
The past week. So very interesting. I mean, I will tell you, historians will look back at this election and say, "Oh my God!" I mean, we lived through it. It was torturous. I mean, every time I watched, the stuff on TV, I would have to I would want to take a shower. It made me feel so uncomfortable, the whole thing. But now, that it's over, the other thing that's really out of the market is uncertainty to some extent.
Oh, I wouldn't agree with that because I don't. I wouldn't agree with that because if in fact there's plenty of things that he can do the first day he's in. And if he does them, it's going to affect these large multinational companies. What cracks me up is that it seems that a lot of people think that something's going to change financially, okay? And I don't see it.
No, it's not going to change financially overnight.
He's a financial guy. It's like, is he going to wreck that? No, he's not going to wreck that.
No,
so if people think that it's going to change, to me, this is going to be more of Wall Street even getting bigger.
Well, infrastructure building is going to provide a lot of new jobs. And we do need an infrastructure project to rebuild the airports, the roads, the bridges in this country, the wall aside.
No, I love that idea. I don't.
Yes, I love it too. I mean, we haven't had it since Eisenhower.
Yeah, no, listen, I think it's a great idea, man. Here, stay right there, all right? One more section. Stay right there, folks. So Indy and I are coming right back. Right now, we get the Dow up 233. Nasdaq's down 41. S&Ps are up 4.5. We're going to be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. The Dow right now is up 217. You get the Nasdaq down 45. S&Ps are up 3. We're talking with our man, Mr. Andy Heck. We're talking commodities. We're talking infrastructure. We're talking speculation.
Politics. We're talking it all, baby.
Well, we're talking speculation. As where's it going to go? What's going to go? And all the above.
It is. It's a massive change. I mean, it's a massive change from the last 8 years, certainly, and it's going to be a very interesting time to watch. I'll tell you, I'm still pretty shocked. I think we spoke Tuesday, as you remember, and we were looking at all the polls, man.
Yeah.
You just open the garbage can and throw them in there.
There's no doubt about that.
I mean, come on, people, they had no clue. Now, it was a close election. She won the popular vote. But running for president of the United States is a strategic. You have to be like a political surgeon because you got to put that together, the string of states that add up to the 270. And in electoral votes, he was a clear winner.
Oh yeah,
so,
she was losing early too. I mean, you can see them rolling in.
I saw
there's
Florida,
no doubt about that. Yeah.
When I saw Florida and Ohio, I said, "Oh, he's good."
Right.
Wow.
No doubt.
We're watching big history tonight. Big history. And so when you get such a dramatic change, and look, this isn't the first change this year. We had a change in England, and this made England look like kid stuff, right?
Listen, I hear you loud and clear. I'll believe it. I can see that we can get a couple bills through for infrastructure. What I don't see, what people are expecting, is that in the financial business that they're going to get changed. Because my take on it, the financial business, the banks are going to the moon.
Oh, I'll tell you what I think. I think the big change in the financial business, Tom, will be that they'll get rid of Dodd-Frank.
Yeah, that's my point. That's my point. People are mad because they think they're getting taken to the cleaners. So the banks are going higher. Do you think the banks are not going to take people to cleaners now?
But the banks are going higher. There's no question.
The banks are going higher because there's going to be less regulations. So there's going to be less regulations in the bank so they can take more people to the cleaners.
They're talking about putting the Treasury Secretary, Jamie Dimon. I mean,
Well, it's going to be a financial guy. That's my point in all of this, that there's not going to be change as to people think they're going to get a better shake. That's my point,
By the way, I have to take my hat off to our colleague and friend, Mr. David White, who on election night I was texting with. And, I was not convinced early on. He was convinced from the afternoon of the result. So he called it. I got to give it to him.
Yeah, well, he's a Trump guy anyway, so.
But he called it for all the right reasons. He actually, in the afternoon, told me all the states he was going to win. And you know what? It came true.
That's a beautiful thing, man. Totally.
Yeah, Very interesting. I mean, it's good. Yes, I think Fletcher's right. They're looking to bring back Glass-Steagall, where he'll get good bipartisan support, especially from the progressives like the Elizabeth Warrens and the Bernies, and dump Dodd-Frank, where they'll go screaming and crying. But I think, a lot of regulations. I mean, Trump said during his campaign, for every one new regulation, I want to get rid of 2 or 3. And I think we're going to see that. I think so too.
Yeah, I think he absolutely will.
I think there's a lot of wasteful regulation, and I don't think it's necessarily a bad thing.
What I don't, I agree. But what you're not going to see, which they keep floating out here, is that they claim that carried interest is going to go away, and what's going to happen, folks, is that he is not going to. He's going to do anything and everything to make sure that property's worth more money, not less money, and that hedge funds are worth more money and not less money. I mean,
well, we shall see.
We shall see. Do you think he's going to slice his own throat?
No, I don't think he's going to slice his own throat. I do not. I do not. And I think any changes will be gradual. But, this is really the first time. I mean, I guess what's the last time we had a billionaire come into the White House? I guess Kennedy, right?
Well, he wasn't a billionaire then, but maybe he had as much. It might be the same percentage. Yeah, I would say that. Yeah.
I mean, and Trump, he's not. It's not like he's a 40-year-old guy. I mean, he's 70 years old. He's a very interesting study here. It's a very this is
man,
like no other we've ever seen, and it's going to be an interesting 4 years, Tom.
Oh no, I agree. I mean, and I can tell you, I wasn't for the guy, but I'm excited to see what he can do too.
Right.
I mean, I am.
You know what?
No doubt. Do you know what I mean? It's like, okay, show me. Now it's a show me. So it's great.
I believe in this country, we elect a president. It gets very divisive. But when the people speak, it's our responsibility as citizens to get behind that person and to wish them well.
Right.
No
doubt.
No question.
And a larger issue, it's not about the politicians anyway. It never has been, okay?
It's right.
I mean, you're from New York, I'm from Boston. I've watched politicians come and go like, forget it, man. But the power they wield, they wield it for that particular point. But guess what? They can all leave and the people are still going to be fine. So.
Right. Meanwhile, half the country is very happy, and the other half is not only upset, they're devastated. So,
I don't know about that.
Division.
I'm sure there's plenty of people that are, I guess. I'm not quite sure if it's 50-50 because the Clinton had problems too. Do you know what I mean?
She had a couple of problems. But you know what? It's a new era because look, we came through an era which was the Bush, the Clintons. Now people rejected establishment. You know who called it right? Very interesting. Probably the most liberal guy out there. Michael Moore said back 9 months ago, Trump is going to win the election because. As he said it's a giant middle finger at Washington. And you know what? He was right.
Yeah, well, I saw that tape, though. That was one clip of the tape. If you keep going, he was being facetious when he said that.
No. I know that. But he did say that he would win the election. That was his prognostication.
Okay.
And look, I saw the tape, too. No question. But I've been reading. I always read his blog.
Yeah.
It's an interesting blog.
Okay.
And he did call this. He called it before Trump got the nomination. Living in a place like Flint, Michigan, he felt the groundswelling of unhappiness amongst this is a vote. This was a vote of a very unhappy electorate. No question.
Yeah. Well, they've lost a lot of jobs.
But the best news is the election's over because I couldn't take another minute of it. How about you?
That's funny. Listen, I'm happy too, man. There's no doubt about that. We'll see where this whole thing shakes out. There's no two ways about it. And this volatility in the market, this is not going to slow down, though.
No, we're going to have a lot of volatility.
We're at space A here. We have no idea, who is going to be in the administration, who's going to run what, and that's going to make.
Well, I tell you, he's got an opportunity to put up a bipartisan cabinet, which would be probably a good idea to select some people. We're going to learn a lot about him in the next couple of weeks.
Couple weeks.
His governing style.
I think it's going to take more than a couple weeks, but.
Well, I mean, we'll start when we see the cabinet appointments. We'll learn some important things.
I guess one of the biggest things that I can't wait to see is that he claims he's going to bring jobs back that have been gone forever. Okay, so if that's the case, if everything's going to be made in the USA, well, guess what? Those bonds are going to go a lot higher because we're going to be paying a lot of money, man.
We shall see.
It's a beautiful thing. Cooking, brother.
Thank you.
Look forward to the show at 5. Yeah, I'm going to see you in a week. Las Vegas.
Can't wait, babe.
Stay right there, folks. We'll come right back. Dow Industrials right now up 227. You get the Nasdaq down 42. S&Ps are up 4.5. We're going to right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now is up 213. You get the Nasdaq down 44. S&Ps are up 2.5. If we go over and we take a look at the SPY, you're going to see we got a failure coming in once again. You're at 216.82 right now. Anything under 217.03 is a failure on price, on volume, all of the above. This September 9th downdraft, folks, is a big number inside the S&Ps. Haven't been able to bite it. We went up. We hit that on the 22nd of September as well as the 10th of October. We banged it out today, and it looks like it just can't handle it. We go over to the NDX 100. That's set up the same way. The NDX has just given it all up, actually. You know, it's down $1.95. Not that's the end of the world. It was down to 114.19 earlier. And if we take this coming into, yeah, this is going to be pretty neat. So if you take this going into a weekly, you're also going to have quite a failure out here. when you didn't hit the highs. The IWM, now here's the divergence. IWM, bottom line, the high out there is 125.88, and that has some juice behind it. So the IWM is saying it can still hit the highs. The Dow Industrials, that's going to be a close call. The Dow came inside the 18,668 yesterday. If it does it on the weekly, then that's going to be a failure on the weekly. So you get a lot of divergences that are happening out here. If we go over to the King Dollar for a second, bottom line is that King Dollar, there's no reason that it couldn't. When you get this close to a swing high, man, you should have whacked it. 99.090. It went to 99.080. So someone is selling King Dollar up at those levels. That with the interest rates going up this quick. Well, fundamentally, the bottom line is that interest rates going that quick, market can't stand it. That hasn't happened yet. It will happen, okay? You don't go from we just went from a 1.7 to a 2.13 in the 10-year in literally 3 or 4 days. That is a monster move, folks, okay? There was a 3 deviation move yesterday, which is very unusual. But guess what? That's built into the market right now, and we'll see where that shakes out. Some of the higher volume stocks out here. Today you had Bank of America up 78 cents. Wells Fargo's up 378. The banks definitely broke out. If we go take a look at the XLF out here, in 2 days we just went from $19.80 up to $21.60. J.P. Morgan Chase is at all-time highs, $76.59. Bottom line, this thing looks like it's let me see, 325 million. No, it's not going to do an ABC up, but it broke topside, and it broke topside in a big way, no doubt about that. We go take a look at the XLE. Now, the XLE is just the opposite. The XLE is, trying to hit its highs, but I don't see that breaking out. What you have with the XLE, the top of that consolidation is $71.98 on the XLE. We're getting close to it. It's losing strength as it's getting up into that level. Coming into Friday tomorrow, bottom line, what I expect you're going to see out here is, we'll see. The Dow can continue higher. The S&Ps and the NASDAQ, we'll see whether they can get the juice. Right now, the NQs are showing that they are the dead dog in the water. The NQs right now are down $75. You're trading at 47.46, and that is one monster move. And when you take a look at that, they're trading back to where they were on August 5th of this year. So that's problematic. The biggest problem with the NQs that I see is that the high volume spike low from Brexit is 41.64, and we're at 47.44. That's a long way down. You stay right there, folks. We'll be coming right back. Dow Industrials right now up 224. NASDAQ is down 40. S&Ps are up 4.5. We're going to be right back.
Internationally at 727-445-1044.
Let's go to Mike in Wilmington. Hey, Mike, what's going on?
Hey, Tommy, how you doing, buddy?
I'm doing great, man. Yourself?
Good, pal, good. I'm calling to give you a compliment because I just want your listeners to know that you are on your game right now. I've been listening to you for a lot of years, Tom, and you were on your game. And I'll tell you, I'll never forget you calling King Dollar back when it was in the 70s. You saying it was going here, and everybody couldn't even believe that it could even dream that it was ever going to go back to the 90s.
I appreciate the feedback, man.
All right, pal.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Manifest your true intentions. Regardless of what language you speak, your intent will be manifest through the word. What you dream, what you feel, and what you really are will be manifested through what you say each and every day. Market-wise, let's take a look at it out here. We had the Dow Industrials close up 218, NASDAQ down 42, S&P's up 5.5, gold contract down $16.30, trading at $1,257 an ounce. Silver up 16 cents at $18.53 an ounce. Platinum down 26 bucks at $9.74 an ounce. Copper up 8 pennies at $2.53 a pound. Light sweet crude down 81 cents, trading at $44.46 a barrel. Notes down 21 ticks, 127.11. 30-year bond off 1 full point plus 7 ticks, 155.24. Both notes and bonds, folks, moving downtown with wide price spread, follow through, volume, all of the above, rates going up. King dollar up 326 ticks, 98.85. King dollar almost got the high, tested the high of last week, couldn't quite handle it. Euro is at $1.08, and the yen is trading at 106.91. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? SPY gets to $218.31. You do 167 million shares. Bottom line, you get a failure on price, failure on volume. And where does that failure take place? The 9th of September, folks. That's where the S&Ps are having a hard time getting up over. This is the third time up. We'll see if it tries it again. I suspect, I don't see it trying it tomorrow. Bottom line, this is what you have. When we came down on September 9th, we came down on 221 million shares. On the 22nd of September, it trying to get up into that number, couldn't handle it. On the 10th of October, couldn't handle it. Today, couldn't handle it. When it's really unusual when you have the Dow Industrials blowing topside like we did, and the S&P can't handle it. We get over to the NASDAQ Composite. NASDAQ Composite also couldn't handle it. NASDAQ Composite got to a price point today out here of 5,302. You coming into the downdraft from the 11th of October. Closes down 42 bucks. Bottom line, the amazing thing about the NASDAQ Composite actually is that it couldn't even make the swing point from the 24th of October. Bottom line, it's down, and it's down on volume. The 3 Qs, same setup in the NDX 100. NDX 100 got to a higher high today. Couldn't make it to the swing, though. The swing point on the NDX 100 of the 3 Qs is $119.66. We made it to 118.38. Gave it up. Bottom line, that's saying that these Qs, which is incredible actually, because the Qs were the strongest indice. Now you're up at these levels, and there's sellers inside these Qs, and it looks like there's sellers in a big way. Gold contract. Okay, so we get some divergence out here. This is where we are. Gold today had wide price spread once again. Yesterday was amazing what we had. Gold yesterday went from 1338 to 1268. Today we went from 1292 to 1251. Right now you're at 1257. And that's saying, hey, that 1246 is game. You know, coming into a Friday, I expect you will probably see this thing get tested. You could actually 1246 to 1243. There's a swing point from the 7th of October at that level. Now, that being said, it's going to be really hard for it to break down at that level. The reason being is that when you have 2 days with this much force and this much power inside the market, meaning going up and going down in the gold market, it's going to be tough to break out these lows. Silver, and here's the divergence also. Silver is holding price. Silver actually was up 15 cents. Now this is kind of this is really different. Bottom line, yesterday you get to a price point of $19, have volume behind the move, do 157 million shares. Today we do 112 million. You get up to a price point of $18.99. Bottom line, silver still saying it wants higher price. Notes, the 10-year note, we get 10-year note down 20 ticks. We are at 127.12. You get the volume on the move. Bottom line is that yesterday, as I said, there was a 3 deviation move, which is pretty intense on the way down. We take a look at the 30-year. The 30-year right now is trading at 155.30. And if we do take a look at the way the 30-year is set up on a continuous contract, this is what you have. Pull this back a bit. We broke the swing point of 160. Your next level is 151.25. So we're at 155 right now. We've had movement of 9 points this week. 9 points, folks. We've gone from 164 to 155. So it's not going to be a huge stretch to go 4 points down more from here. And that's where it looks like it wants to go. Now, at that level, you get some support there. So we'll see if it can hang tough at that level. King dollar. What do we have with king dollar? Well, king dollar, folks, couldn't handle the high out here today. So it's going to be intriguing to see how king dollar handles coming into a Friday. The high in king dollar is 99.090. That was established out here on the 25th of October. We got to 99.080 and had 39,000 contracts, which is pretty good contracts, by the way. Bottom line, they couldn't hit it, you know. And what you do have is what's so unusual about that is that when you have interest rates going up that fast, the bottom line is that normally you'd have a dollar that will charge forward. That being said, fundamentally, these interest rates going up that fast are going to hit these large, it's going to hit everyone. The large companies it's going to hit, and it's going to hit them very quickly. Why? Because guess what? The amount of money that's out there, number one, or that large companies are borrowing, number two, makes a huge difference as to what comes down to the bottom floor. And with interest rates going up this quick, the divergence also inside the marketplace is that Dow Industrials. Because realistically, the Dow stocks need more cash than the tech stocks, and the tech stocks are the ones that are going down. The NDX 100 stocks, they have plenty of cash stashed in a big way. Well, the Dows don't. And that's where there's divergence in a huge way. You stay right there, folks. We're going to be coming back with our man, Mr. Chris Gaffney, the president of Everbank World Markets. And, of course, we're going to be talking these markets. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 218, the Nasdaq down 42, S&P's up 6.5. Let's go over to our man, Mr. Chris Gaffney. Chris is the president of Everbank World Markets, folks. You've heard of him many times on TFNN. We're always lucky to have him on highly volatile days, news days, all of the above. Chris Gaffney, welcome back to TFNN.
Thanks, Tom. It's great to be here.
I'll tell you, volatility here. We get an election that's done. The markets. I guess you can take your pick, whether we're talking currencies, commodities, or the markets. Just give me an hour, and maybe I can tell you which way they're going to go.
Yeah, nothing unexpected happened this week, did it? Yeah, it's. I mean, we had flashes of Brexit during the election results. I stayed up and was keeping track of them and writing where the markets were going, and it was almost identical to what we saw with Brexit, and the unexpected results, the flight to safe havens, and then the next day the snap back, and everybody kind of looked at it and said, well, the world goes on, and things aren't going to be that different, and we certainly, today now we're at all-time highs on the markets.
No doubt.
On the stock markets.
And when we talk about the world not being that much different, there's plenty of folks that, number one, like traveling overseas. Number two, have children that go to schools overseas, and all of the above. And as you come over to our website, folks, okay, come over to TFNN, and on the right-hand side, you're going to see the Everbank banner. And we're going to talk about grab your passport and step into foreign currency. So this is pretty cool, what you've set up here, Chris. And we've had these accounts for quite a while, right? The World Currency Access Deposit Account. But if you can explain what the difference is and how so many more people can now take advantage of this.
Sure. And we're known for having these FDIC-insured deposit accounts that are denominated in foreign currency. We were one of the first banks to offer them, and we've been offering them for a long time. But we're excited about a new way for investors and your listeners to get involved in the foreign currencies. We've always preached diversification in alternative asset classes, and we've also felt, personally, I feel like dollar cost averaging is a great way to create a position in any one asset, because you put a set dollar amount into that asset over a time period, and you end up typically achieving a lower cost basis, because when the price is down you buy more, when the price is higher you buy less. So that dollar cost averaging is a great way to establish positions. We've had it in the metals, but just recently we started offering it for the currency accounts. So you can buy, if you decide, hey, I think it's smart to have a position in currencies, and right now I think the Mexican peso is cheap, but it may get cheaper. Who knows? So what you can do then is you can set up this dollar cost averaging, what we call our currency purchase plan, and put as little as $100 a month into the Mexican peso, and it's done on a regular basis. We do the transaction for you. We price it at just 3/4 over where we buy it, so it's a very competitive spread. And then over time, you'll establish that position in whichever currency you choose.
What's so cool, Chris, is that we actually had a couple, one of our callers in particular call in when the peso was crashing there, I can say about 6 weeks ago. Bottom line is that they were down there buying a second house.
Yeah, and there's I'm sure a lot of your listeners have it's a preferred travel destination right now, and Mexico is cheap, and will it get cheaper? We get asked all the time, by callers, and do I buy it here? Do I wait? Do I, how do I time this? And really, the best way is to do it over. Nobody can predict where the markets are going. I mean, this week has shown us that. And if you try to predict it, if you're trying to predict, that's when it usually goes right against you. So I think it's better just to take a longer-term view, establish that position, and again, dollar cost averaging is a great way to do that.
So let's just walk some of the folks through this. So first, we'd give you guys a buzz at 855-750-4051, and we open a cash management account first. Would that be correct?
Right. And that cash management, it can either be a U.S. dollar, what we call it, a U.S. dollar access account, but it can also be a checking account or a money market account where we have some great rates. So you're going to get some good interest on that U.S. dollar account while it's sitting here. And then we also establish the currency account for you. So you make an initial purchase into that currency account as little as $100, and then on a regular basis, either once a month or twice a month, on the 1st or 15th of the month, we will go out and move $100 or whatever you tell us to move into the currency. So we will put that trade in for the client. It's automatically generated, and it's priced at whatever the spot rate, wherever we purchase the currency, plus 0.75%. So the cost associated with it is 75 basis points, 0.75%, which on a currency transaction, if you go through the airport and try to buy currency at the airport kiosk, you're going to get charged 4 or 5%. So, our currency exchange rate is very competitive. We're very proud, and we let them know exactly what the cost is going to be. Yeah,
and it's so cool that, the reality is that I don't think many of us actually walk into banks anymore anyway. So it's like, why not have your main account at Everbank, right? You use that as the cash management control. You can do the World Currency Access Deposit Account. Now, you could actually do a couple of these, right? Let's say if I wanted to do a peso and then I think I'm going to Europe, I could do a Europe one too, right?
Absolutely. You can do as many as you want. Again, the minimum's just $100 per currency. So we have 21 different currencies ranging anywhere from Mexican euros all the way over to China, Russian rubles. We even have, Brazilian real. You can take some speculative bids if you want, but yes, Swiss francs. We've got 21 different currencies.
That is so cool, man. I'm telling you. In this day and age, we're still a one world deal too, so that's pretty cool. I gotta get you some feedback, man. So check this out. What happens with Everbank, folks? They have a lot of different CDs that are out there. The last market safe CD, I got some people emailing me right now. They're all elated because the last one had copper, nickel, soybeans, and silver inside it. And needless to say, those things have been up tremendously. These ones here, this one was just funded on October 26th. That's what these clients are telling me anyway.
We got some good. I'm glad to see your people are giving you some feedback because we always saw a tick up in callers right after that. So those are good market safe CDs are another a unique product that we offer at Everbank, and we'll sure come out with another one. We're dark right now on them, but we're going to planning another one the first part of next year. So they take a little bit for us to create and bring them to market, but when we do, we'll be telling you all about them.
Totally, folks. And listen, you give Everbank a call, 855-750-4051, and open the cash management account, folks, because then you can take advantage not only of this World Global Access Deposit Account, but they have a lot of different things that they're going to have in the future that you can still take advantage of. Chris Gaffney, you have a great one, a safe one, and of course, the next volatile day, we're going to have you on.
Sounds great. Thanks, Tom.
Thanks, man. Have a great one. Have a safe one. You stay right there, folks. We're coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. NVIDIA closed at $67.77. It's trading at $75.56 right now. So that is getting up and over. Yeah, it's going to new highs. Let's see what they have to say. Okay, so the estimate was 69 cents. They made 94. Oh, that's a big number, man. Holy cow. That was the third quarter. Bottom line. Top line, look at this top line, too. This is pretty amazing. Top line, the estimate, folks, was $1.69 billion. They took in $2 billion. Huge, huge number. Record revenue of $2 billion. That's up 54% from a year ago. Can you imagine growing 54% in 1 year? Amazing. Their earnings per share, 83 cents. That's up 89% from a year ago. Quarterly cash dividend raised 22% to 14 cents per share. Big number. Big number. And so let's just... The thing is, what does happen here, though, now this is where this is going to get interesting. So what they're also doing, NVIDIA added $2 billion under its stock buyback program, okay? Now this gets intense because, so watch what happens here. It closed at 67. It's trading 76. So what does happen is that the more that you buy shares back, the less shares there are in the marketplace. And, of course, the less shares that are in the marketplace, what ends up happening is that the higher the earnings will be if you're taking the same amount of cash, okay? That's the good part. The second part of that, however, gets into the aspect, are you buying at highs, number one, and they are at highs, and are you using borrowed money to do it? You know, one of our tigers in the den, he was saying, Duffy, there's no doubt that the amount of buybacks that we've had are extraordinary. They can be good, but guess what? With these interest rates going up, that is going to make a difference because as the interest rates go up, that buyback gets more expensive. If we go over to Disney, we take a look at Disney. Disney closed at $94.96. That is trading at $92.56. And Disney's got some problems here. Let's bring this back. So Disney topped out August of 2015 at $122. Disney has a high volume swing low from February of 2016 of this year of $86. Now the high of the low is $93. We're at 92 right now. So Disney's going to go after this high volume swing low. And I suspect what it's going to be, once again, it's going to be all about ESPN. Let's see what they have to say. Disney posted fourth quarter profit that trailed analyst estimates, hurt by lower advertising sales at cable TV networks, including ESPN, the company's largest business. Okay, so earnings excluding some items fell to $1.10 a share. Analysts were forecasting $1.16 a share. Sales slumped 2.7% to $13.1 billion. Ending October 1st, missing analyst estimates of $13.5 billion. Profit from the cable division. Listen to this. See, this football, something's going on, folks, also, that there's less people watching football this year, which is a huge problem for all the cable stations, well, all the stations in general. But so profit in the cable division tumbled 13% to $1.5 billion, while the revenue declined 7%. Broadcasting profit rose 37%. Profit from parks and resorts shrank 5%. Disney's consumer division posted a profit of $424 million, down 5%. So all the legs of their stool went down. That's pretty intense, actually. You know, you're talking about cable down, network down, parks down, and of course the consumer division is going to be down if parks are down. Because Disney earns almost $8 billion a year from TV, including the ABC network, the company is viewed as especially vulnerable to the pay TV industry's loss of customers to newer streaming options like Netflix. Last week, Nielsen Holdings reported that ESPN lost 621,000 subscribers from October to November, part of a broader look at the TV trends that also found other cable networks losing viewers. At the same time, Disney is having to pay more for programming. Now, when Nielsen came out with this last week, folks, okay, meaning that they came out on their rating saying that Disney lost 621,000 subscribers from October to November. Disney was protesting and they were kicking, screaming, yelling. They were kicking, screaming, yelling enough that even Nielsen said, okay, I better go back and check these numbers again. And they went back and checked the numbers, and guess what? Those numbers are sticking. So that is a monster number to lose inside of a month. And bottom line, you know, you can see that they were worrying first just the aspect of less people at ESPN because what has happened is that the amount of money that they've paid for the content is huge. So that also is predicated on, guess what? You need that many people listening simultaneously. It looks to me like what is also happening is that there's so many different venues now that are vying for all of our time that you only have so much time. And then it's like, okay, do you want to just be disconnected, period, and go out and, you know, go swimming, go running, go hiking, you know, go do something besides being glued to a machine? I think that's in the ball of wax also. Let's go take a look at inside the NDX today, the strength versus the weakness. The strength out here today was Norwegian Cruise Lines. That was up 6.8%. Bed Bath & Beyond was up 6.2%. Pace Car was up 4%, and Seagate Technologies was up 4%. Taken away from it on the way down, NetEase was down 9% or $23. That is one hit, man. Liberty Networks. This is all. Liberty is cable networks. That was down 6.8%. Netflix was down 5.5%. Let's go take a look at Netflix. So Netflix is coming back to close the gap. Now this is, if you've never seen how gaps close, folks, okay, this is a good one to watch. And what it is this. October 17th, Netflix came out with numbers, big numbers. Netflix had closed on the 17th of October at $98. Opened the following day at $116. Goes all the way up to $129, and then guess what? Now you're back inside the gap. Now, being back inside the gap, folks, is a problem. Why? Because the gap's going to get filled, and that means that you go down to $102, and just picture you bought something up at $129. You get a gap down below, and it's going to go get filled. It's like, bottom line, you got to pay attention to these gaps. If we go over to Facebook, we take a look at Facebook. Facebook took a big hit. It came back, but guess what? Now Facebook has another high volume swing low. In fact, Facebook's a confirmed ABC down. Here you go. Okay, so Facebook traded as low as $115 today. You're at 120. Your A point on this is 133. Your B's 119, so you're talking about $13. Your C's 124, so you got $1.10. And guess what? Down at $1.11 is Brexit. $1.11 is the high of Brexit. $1.08 is the low of Brexit. Brexit, here we come, folks. You stay right there. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Let's go take a look at the GDX. Okay, so the GDX, folks, is the gold miners, Vectors Trust, the ETF. That's trading at $22.75. It was down $1.84 today. Okay, so now this baby's coming down in some juice, too. We come down with 180 million shares today, which is a monster. We put this on a weekly, and this is what we have. The week of October 7th, we hit 2258. You did 583 million. Already, we've done 456. So that is saying tomorrow, number one, I suspect it's going to go test it, which is 20 cents down, but it is also saying it can break it. Okay? Now, that being said, what we're going to do is that if you're looking at the GDX, folks, okay, we're going to go right through the weighting structure of the GDX because that is a great way to see that, okay, what looks good, what doesn't look good. Barrick is the first weighting structure. Barrick is 9.3% of the GDX. So Barrick comes down today, $1.48. You're at $15.77. $15.39 is the low. You've done 37 million shares. Bottom line, we'll see how it hits it. And what has happened, and you got volume coming out before the swing point, so that's the positive. The negative is that we're so close to it. But bottom line, I expect more than likely we're going to probably test it. Newmont, we go to Newmont next. Newmont is 9% of the NDX. Now, Newmont had volume today. It's down 236. But because Newmont, what happened with Newmont is this, folks. Okay, so Newmont has a high volume low of $34. But because Newmont had already got toasted and roasted, when this came down with its earnings, it came down pretty hard. Newmont's going to have a hard time, number one, just getting into the 34.15, never mind the $34. So I'd say Newmont, even though it was down pretty good, looks pretty good. Gold Corp. We take a look at Gold Corp, and I'll get back to Newcrest Mining. Gold Corp is a problem. Gold Corp came down $1 today. You're at $13.96. This is going to go after the $13.35. Put this on a weekly. $65 million. So Gold Corp goes like this. I suspect $13.92 will get tested, which is really right where we are. It's going to be harder for Gold Corp to break down also, and it's not because of the swing point from October 7th. It goes all the way back to where it broke topside from. This thing broke topside with 92 million shares, and you're coming back in with 65. So that's a toss-up. That's not that bad, actually. Franco-Nevada, FNV. Franco-Nevada is 5.5%. Franco-Nevada came into the swing today, which is 61.76. It broke it and then rejected it. Okay, so now let's put this on a weekly and see what she's doing. And on a weekly, you're coming into 8.4 million. Yeah, it's not even close. Okay, so Franco-Nevada, price-wise, yeah, it gets down into it. But it's going to take a lot more to break down Franco-Nevada. And the reason being is how it went up in March. So the low of that area, though, so the high of that area is 68. We're already into it. The low is 57, and we already hit 61 today. So it's like 61 can get tested again. That's how that's shaking out. Silver Wheaton, this is a huge problem child. And this is what took the GDX down pretty good today. So Silver Wheaton is 4.9% or 5%. This is an ABC down. They come out with, their numbers were terrible. They come out with the numbers. ABC down, it goes like this. $29.53 is your A, 22 is your B. So you get $7, which gets you $18. So that's got another $2. That wants to get down to the, so you picture the weighting structure of this alone today was bringing the GDX down. It got about $2 more downtown, as did Rangel Resources. Now, this one's interesting because it's like Rangel also came down hard, $8.60. Rangel is also coming into strength. So, bottom line, though, we'll see whether, this thing can hold. What I'd like to see with Rangel is I'd like to see it hold its $78. Because if you don't hold $78 in Rangel, meaning tomorrow, you're at that can go to 71 pretty easy. That Rangel is 4.2%. We go to Anglo Gold. Anglo broke. So this broke a swing today, but you're coming into strength. Okay, this is cool. So Anglo was trading 1246, 1239. You're coming into 37 million, and you're coming in with about 26 million if I add up tomorrow's. And then Royal Gold, RGLD. Royal looks pretty good. So Royal Gold looks pretty good. So if we go back to the GDX again, so we're back to the GDX. This GDX at 2275. $21.42. So what you have is this: the 2142 area and 2129 is where we broke topside from. And that's what we're probably going to see tomorrow. And the real kick is going to be is that, do you get a rejection of price there? We did 500. See, the volume's still going to be hot. Hey, it's going to be. Hey, tomorrow we're going to have. What you're going to have out here tomorrow in this 583 million. 1 second, 583. Yeah, it can do more volume. So tomorrow's going to be a big day. The volume has come out before the swing. So we'll see how this whole thing shakes out. And unfortunately, it's going to be all about tomorrow. And what does happen inside the metals market on a Friday when you've been highly volatile, it's dangerous. That'll be the negative part. The positive part inside the metals market is the dollar. If we go over and take a look at the dollar should have been able to break topside today easy. And the reason I'm saying easy, folks, is this, is that the fundamental correlation is you get interest rates that are going up, you get a much stronger dollar. The dollar had sellers as it was testing its high at 99 bucks up here. And it's not there were a lot of sellers, but guess what? That means there wasn't a lot of buyers, because it's like I can see the sellers. The sellers came in at 10 o'clock this morning. From 10 o'clock, that was the highest volume. Someone threw a bunch of contracts at the dollar at the top. That is not a huge amount of contracts they threw at the dollar in order to have the dollar go down. So what that's also saying is that there's not enough people buying the dollar at the high to go break into higher price. Now, as you're breaking into, as interest rates are going up, they should be hand over fist in the dollar. And the reason they're not, my take on the reason they're not, is that if these interest rates stay up, the stocks are going to go down. As the stocks get down, the dollar's going to go down. And as these interest rates get higher, bottom line, everything gets more expensive. And that's not, we're in an era that things haven't been going up. And if we're going to be in an inflationary era, then you're going to have to do the formula, is inflation running quicker than interest rates? If interest rates are running better than inflation, guess what? We won't have less money to spend. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Yes, folks, you stay right there because we've got our man, Mr. Andy Hecht, coming up, and it couldn't be a better time because of the way that the commodities are moving, the dollar's moving, all of the above. So you stay tuned right here at TFNN. And remember, if you happen to be in your car right now, that you can get us 24 hours a day right on your cell phone. You go to TFNN.com, you hit Tiger TV on the right-hand side, you're going to get some great HD video as well as audio. Let's go over to Nostrum. So Nostrum, folks, was up $3.74 today. Of course, Nostrum is the retailer. Bottom line is that they are up an additional $4 after the close at $60, and let's see what they have to say. So Nostrum, their revenue, expected revenue is $3.48 billion. They took in $3.54 billion. Their earnings per share, they lost 6 cents. The adjusted earnings per share, they must have a write-down, is 84 cents. They're saying they made 84. Bottom line is that, the market's digging what they have. There's no doubt about that. This is interesting, too, how this, the rest of these, plenty of these clothing retailers have got killed. Nostrum is doing really well. So the earnings, they see, they actually upped their forecast. They had seen earnings of $2.60 to $2.75 for the year. Now they see $2.85 to $2.95. Their comps have moved up 0.4%. That's a good number. The Nordstrom brand comp is up 0.9%. Their Nordstrom Rack brand, this is the big one, that's up 3.9%. That's a big number. They get good numbers. So we're over $60. Let's bring this back. Okay, so the highs in Nordstrom is 77. You're going into the downdraft from November. That high is 57. That high is 67. The bottom line is that they're gonna get some juice in that. So you can see there's a differential. Excuse me, folks, and a lot of these higher end stores. Macy's, Macy's is an equity that absolutely got killed. Now, that came out and didn't lose as much as they thought it was going to lose. You're at $40 in Macy's right now, but that was a $73 stock. And what Macy's is going to do, they're going to try to, well, they'll get it. They're going to monetize some of their real estate. That's what they plan on doing. But Macy's is in trouble compared to how Nordstrom is trading out here. No two ways about that. Now, you stay right there. Our man, Mr. Andy Heck, is coming up next. And what do we have out here? In the S&P, folks, you had a failure on price, failure on volume. NASDAQ Composite, failure on price, failure on volume. NDX 100, failure on price, failure on volume. Dow Industrials, different animal. Dow Industrials at all-time highs. Bottom line, can go higher. If we close under 18,668 tomorrow, and the Dow, that'll be a failure. I'd have to see on the volume, but it'd be definitely a failure on price. The small caps do look like they want to go tag the high that was established out here in October. That high, September rather. That high in the IWM would be $125.88. Right now we're at $124.50. Some of these high-end tech stocks have been getting hit big. After the close, NVIDIA come out with numbers, and that's trading up good. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock. Stay right there. I'm Mr. Andy Hex coming up next, folks.